If I told you that the biggest financial bubble of our lifetime might already be inflating under our feet, would you believe me? Because the last time I felt this exact same energy, people lost their homes, their fortunes, and some even lost their minds. And the craziest part? This time, the bubble isn't powered by the internet. It's powered by AI. So before you invest another dollar, watch this video till the end. Because if history repeats, this could be the moment that decides whether you become wealthy or wiped out.
I want you to imagine something for a second. It's 1998. The world is drunk in excitement. Anything ending with .com becomes a golden ticket. People who never even touched a balance sheet are suddenly tech investors. And you, wanting to ride the wave, throw everything you have into a few tech stocks with catchy names and shiny websites. And for a while, it feels like the smartest thing you've ever done. Your money doubles, then triples. Everyone thinks you're a genius. You walk around like you've cracked the secret code of wealth. Until the year 2000 arrives. The crash wasn't a dip. It wasn't a correction. It was an earthquake. The NASDAQ fell nearly 80%. Only 48% of .com companies survived. I watched friends lose millions faster than you can blink. Even I took a hit, and I expected it. Here's the crazy part. The internet was the next big thing. We were right about the technology, but wrong about the timing, the hype, the overconfidence. History didn't repeat itself, but oh boy, it definitely rhymed.
Fast forward to today, and I'm feeling that same wild, electric, dangerous energy again. Except this time, it's not the internet. It's AI. People are calling it once in a lifetime, the fourth industrial revolution, the biggest opportunity ever. Maybe they're right. Or maybe it's the same movie playing again, just with better graphics. And because more than 7 million of you started investing after watching my videos, I feel a responsibility to break this down honestly. Before you panic or get greedy, let's zoom out and talk about the 3 hidden forces behind the AI bubble, what they mean for your money, and how to survive whatever comes next.
Force number 1. The Magnificent Seven are controlling everything. Right now, the fate of the stock market and your portfolio is being decided by just 7 companies: Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, NVIDIA. Together, they make up 36% of the entire S&P 500. That means even if you only own 1 share of the S&P 500, you're already betting on these companies, whether you like it or not. And these giants are locked in the most expensive technology war in human history, the AI arms race. Look at how much they're predicted to spend this year. Tesla, $5 billion on autonomous driving and XI. Apple, $10.7 billion making Siri less dumb. Meta, $60 billion on data centers and metaverse. Google, $75 billion rebuilding search with AI. Microsoft, $80 billion on supercomputers and OpenAI. Amazon, $100 billion on AWS AI infrastructure. That's $330 billion. 1 year, all just to win this one technological race. And here's the wild part. This enormous spending might be the only thing keeping the US out of recession right now. So the real question is, how long can they keep this up? Well, according to forecasts, global AI spending will hit $500 billion by 2026, and electricity and power demand could explode to $3 trillion annually by 2030. They're willing to burn billions now for the chance to own the future later, because whoever dominates AI dominates the world.
Force number 2, the AI money machine and why it's dangerous. What I'm about to show you blew my mind. Let's simplify the AI supply chain. NVIDIA, AMD, Intel build the chips. OpenAI, XI, Anthropic buy the chips. Oracle, CoreWeave build massive data centers. Big tech funds everyone. At first glance, normal. But when you zoom in, you notice something disturbing. The same money is being passed around in circles, and everyone counts it as revenue. Example: Microsoft invests $58 billion in OpenAI. OpenAI pays Microsoft for data centers. Microsoft uses that money to buy NVIDIA chips. NVIDIA invests back into OpenAI. Everyone books revenue, everyone's stock price rises. But the actual profits? Not so much. Then came the big one. OpenAI announces $300 billion deal with Oracle. Oracle spends tens of billions on NVIDIA. NVIDIA agrees to invest back into OpenAI, but only if OpenAI buys more NVIDIA chips. This is how bubbles form. Everyone lifts each other up until someone can't keep up. NVIDIA is the real winner. Its stock is up more than 1,600% since ChatGPT launched. But here's the problem. OpenAI is valued at $500 billion and makes only $12 billion in revenue, while losing money every single month. AI services simply aren't profitable yet.
Force number 3, the data wall, AI's invisible limit. This is the part no one talks about. AI has been improving insanely fast, from weird spaghetti-eating videos to Hollywood-level visuals. But we're about to hit something called the data wall. By 2027, AI is expected to consume nearly all publicly available human-generated data.
In simple terms, AI is running out of things to learn from. We fed AI the entire internet, entire books, decades of research, centuries of human knowledge. And soon, there won't be enough new data to feed it. Progress could slow down, expectations could drop, and the bubble could finally burst.
Can we break past the data wall? Maybe. But the solution isn't more data. It's different data, real-world interaction like humans use. So, yes, AI is revolutionary, but it's not unstoppable, it's not magic, and it's not guaranteed.
So, is this a bubble? Is this the dot-com bubble all over again? Not exactly. The difference is, today's AI companies have real products, real demand, real utility, real use cases, and a clearer path to profit.
But we also have overvaluation, revenue manipulation, geopolitical mania, insane spending, data limits, and sky-high expectations.
So yes, I do think we're in a bubble. But we have no idea if we're in the early stages or the final chapter.
So what should you do? Not financial advice.
Here's what I would focus on. 1. Keep investing consistently. If this is the beginning of the bubble, today's prices could look cheap in 3 to 5 years. If it bursts, your automatic monthly investments will buy everything at a discount. This is exactly how I made millions after the dot-com crash.
2. Increase your income. Your income is the fuel for your investments. More income equals more money you can deploy when everyone else is panicking. Start a side hustle, ask for a raise, or pick up a skill that pays.
3. Diversify like your life depends on it. Never rely on one asset type. My portfolio includes stocks, bonds, gold, real estate, cash, even crypto. This is how you survive bubbles.
4. Don't fear crashes, prepare for them. Crashes are not the enemy, they're the opportunity. The only people who lose everything are the ones who panic.
This AI boom could create more millionaires than any time in history, or it could be the biggest trap since 2000. But if you stay calm, stay diversified, and keep investing consistently, you'll be ready for whatever comes next.
If you want to learn exactly how to benefit from a recession, I'm leaving that video right here. But don't click it yet. Make sure you subscribe so you never miss the next big opportunity. I'll see you there.